Johannesburg-based insurance giant Liberty is controlled by Standard Bank Group released results at the start of this month. The insurer said full-year profit rose 8% on increased premium revenue as client retention rates improved and policy lapses slowed rather. Liberty has been targeting African expansion for the past 6 years. Asset management subsidiary Stanlib has also seen improved investment performance. Where do we stand on Liberty? Do you like it as much as you like Old Mutual?
No, definitely. Old Mutual trades at 0.8 times embedded value. Liberty's at 0.9, a little bit higher now. We don't like Liberty, and we don't own Liberty.
0.8, 0.9. That's not much difference there in terms of.
Sure. But I mean, with Old Mutual, you've got the asset play, the unbundling, and all that. With Liberty, Liberty's struggled over a number of years, and if you look at their earnings now, their earnings look quite good. But if you actually drill down into it, they've changed a couple of their assumptions. They've changed their persistency assumptions. So they're assuming that less policies are going to lapse, and all of a sudden, as Paul was saying, that insurers are very difficult to understand because of all the different parts.
Are you saying that they've changed the base to almost make the results look better, or am I simplifying the situation?
Pretty much, you've hit it on. They've changed a couple of the assumptions. They've got grounds to do that, and they've done it, and as a result, their earnings look better.
We might get a call from Bruce Hemphill tomorrow.
Yes, my friend Bruce. Yes. Now, Bruce, I mean, it's interesting because he's the Standard Bank guy that's been, designated with running this thing. Because remember, Liberty was once the darling of the local financial sector. Donald Gordon built it out of nothing, and they revolutionized the market and came with fresh new retirement annuities, unit trusts they'd practically invented. So for a while they were on a high forward rating and they could do no wrong. The Standard Bank relationship came because there was a period, you'll remember, when bank assurance was the way everybody wanted to go. But they've kind of fallen off the bus. They've done some reorganization. Bruce has restructured the thing so it's not the listed holding company, it's the holding company and the insurer at one level lower. But they're in retirement annuities, and that's a business that I worry about because it's got such high fees. They rip their clients off to such an extent, you've got to wonder how long people will be stupid enough to buy those products. In the life space, that's fine. That's kind of, a reasonable line of business. And then they're in associated sort of funeral policies and other things. They are in the savings business, of course, with Stanlib, and as you were saying, the results, the improvement there in terms of performance.
Stanlib has held their own.
I'm with Jonathan on this one. It's, for me, not all that exciting, and I worry about the cyclicality in the results, the embedded complications, the fluctuations with the derivatives in the portfolio that they put in to try and prevent investment drawdowns, all that stuff.
What would you like to see happen before you took this stock and said, okay, it's worth investing in?
I mean, obviously the first thing is a much cheaper share price, but I would like it actually to not be in the Standard Bank stable. Standard Bank, I think, should unbundle it, something like what FirstRand did with creating MMI.
Is there a chance that that could happen?
There certainly hasn't been. I haven't heard any rumours. I don't know. Paul seems a bit more plugged in, knowing where people are in Pretoria.
I think as long as Jacko Marie is at Standard Bank, then Standard is going to hold on to this thing because he's the one who's associated himself with it. But
so he hasn't been exploring any territories that you know of that you should share with us?
Jacko is like the under-14A cricket captain that got demoted to the B team, and he's not going to leave until he's back at the helm of the A team, and then when they've had a period of nice good results, then he can say cheers and resign. Until that time happens, I don't think they're going to see this change, but I wouldn't be surprised at all if a new Standard Bank CEO were to do exactly that, kick it into touch.
It might be worth buying it then for potential corporate activity down the line. Could that be a reason to buy into the stock?
Well, I wouldn't think somebody else would come and buy Liberty. I think Liberty on its own, I think, would do better than rather sitting under Standard Bank.
Anything positive to say about Liberty?
The one thing that I must say about this whole sector is that corporates are no longer providing people with retirement saving products. So if most normal companies nowadays, you arrive, they give you a cost of package and they say, go sort out your own retirement affairs. So there is a good niche there for people to provide those products. So I think Liberty has got great brand awareness and visibility. So really all it needs is ongoing work on its cost base and ongoing work on its product positioning, and it can do well in this market. They've got that initiative called Frank, which looks to me like the sort of thing they ought to be doing for the younger market.
Hot or not?
It's not hot for me.
Not hot at current levels, no.
Nothing exciting you this evening.